Hello, great people. This is Wallace, certified professional. Center is where I practice this teaching. Now, right now, I want us to look at taxation, specifically value added tax. Value added tax. When you talk of the value added tax, this is the tax charged on goods and services whose value has been increased, whose value has been added, just as the word suggests. And how do we add value? We can add value to goods and services through packaging. When you package, through transporting goods, we can add value through storing the goods, offering professional advice, consultancy services. All those are value addition activities. And once we have added value to the service or product, we need to charge VAT for those who are registered for VAT. And when we are accounting for VAT, there are two terms I would like us to put in mind. One is inclusive, the other one is exclusive. For the inclusive, it is when the VAT has been included in that commodity, and therefore, when we are computing VAT, let's say the standard rate is 16%, so we are going to use 16 or over 116 times the amount of that good. For the exclusive, we take 16 out of 100 times the amount, because exclusive means that commodity has not included the VAT, so it is 100%. For inclusivity means, remember, everything as a whole is 100%. So when you include anything you are supposed to add, that is why we are using 116. It is 100% of that commodity plus 16% of the rate, and this translates to 116. So that is why I'm using 116. Now, still, while we are there, it is not every commodity that we charge VAT. For example, the expenses such as salaries and wages, we don't charge VAT to those ones. Again, some of the exports in our country, we don't charge VAT to export. Export, we don't charge VAT. Otherwise, most of the commodities we charge VAT. When accounting for VAT, we are supposed to open VAT account. VAT account like this. This is debit side, this is credit side. Remember, the left side of account is debit, abbreviated as DR. The right side is credit, abbreviated as CR. So on this side, we record anything to do with the purchases and expenses. Anything to do with purchases and expenses, increase in purchase, expenses we debit. At this side, we will give you something we call input tax. On this side, we record things to do with sales, and it will give you the total of this side will give you output. output tax. For example, let's say we have a purchases. We come here and record. We purchase the good worth 2 million. You come here and record that 2 million. Then you multiply by the. We are assuming it is inclusive of VAT. We record that amount there. 2 million. We multiply by 16 over 116. We get around 275, 862. On another date, we paid electricity bill. So because that is expensive, I come and record this side. Electricity, let's say, worth 10,000. VAT on that, it is 10,000 times 16 over 116. We get 1379.31. Let's say we purchased furniture. We purchased the furniture worth 200,000. We'll just come here and do it like that. So 200,000 times 16 over 116. We get 27,586.21. If I was given salaries, I cannot record salary here because we don't charge VAT to salary. Let me come on this side. Let's say we have sales. Sales worth 6 million. I come here and record sales. 16 over 116. 6 million. 16 over 116. We get 827,586.21. Let's say we have sales export. I come here and say that is exempted from VAT as that now, so I don't compute VAT on export. Then I balance my account to see whether it is VAT payable or VAT refundable. It will be VAT payable if the balancing figure is on this side. It will be VAT refundable if the balancing figure is on this side. So let me accumulate the figures. 2758.62 plus 1379.31 plus 27,586.21. My input tax is adding up to 304,827.52. Let me see this side. This side, my output tax is 827,582. And as you know, when we are balancing the account, the higher amount gives us total for both sides. So this 827,586.21 is more than 304, and therefore we are going to record 827,586.21 on both sides. 827,586.21. Then I balance. How do we balance? We get the difference between this high amount and this. So we take 827,586.21. The difference I'm getting here, we have 827 586.21, I minus 304, 827.52. I'm getting 55. Did it? Not 55, but 52. 2758.69. So that is VAT payable. Anytime output is more than input, that is VAT payable. Anytime input is more than output, that is VAT refundable. And you cannot have VAT refundable at the same time you have VAT payable. You cannot have the two at the same time. Okay, now anything that will affect the sales, if it is reduction in sales, you're going to record on the other side and so on. Otherwise, VAT account, we present it in that way. We have these three items that usually confuse people. We have debit notes, we have credit notes, and we have bad debt. In VAT, we have these three things which confuses people. This debit note, the debit note is a note issued to correct underpayment. Debit note correct underpayment. Meaning what? If it is the business that is issuing the debit note to customer, it is demanding more money from the customer. And therefore, you come and record it here in case it is there. Debit note issued, you multiply that amount by VAT rate. If it is debit note received by the business, it means that from whomever we purchased from, he or she is demanding more money and therefore is a payment. And we have said any payment, we record it on the debit side. We come here and say debit note received. In case of credit note is a note issued to correct overpayment. Meaning, whenever we have this credit note, it is a refund. It means we have paid in excess and therefore we are being refunded. So, for the credit note received, you come and record it on this side. Credit note received. We record it on this side because it is reducing purchases. Credit note issued by business to customer, it will reduce sales and therefore we record it here. Credit note issued. Credit note issued. For the case of bad debt, there are those credit customers who fail to pay at all. Maybe they have become bankrupt and so on, and therefore they reduce sales. So bad debt, you record it on the debit side and you charge it VAT. Just subscribe there, YouTube, Wallace Jogu, for more videos and for more classes for CPA, ATD, and any business related